In this problem, we're going to review recording costs for a manufacturer and using job cost sheets. Recall that a job cost sheet is going to consider any beginning costs, that would be direct material used, direct labor, and/or overhead applied that was incurred in a prior period. We'll add direct material used, direct labor, and overhead applied. That will give us the total cost of a job. Tri-City Products uses job order costing. Company records show the following information for September. So we have 4 jobs that were apparently started before September 1st because they have costs that were incurred prior to that point. Then we added costs during September. We are not given the amount of overhead applied, which means, of course, we will need to compute it because every job will be assigned direct material, direct labor, and overhead applied. The direct labor wage rate is $10 per hour. Overhead is applied at the rate of $5 per direct labor hour. Jobs 1, 2, and 3 have been completed and transferred to finished goods. Job 2 has been delivered to the customer. Because overhead is applied based on direct labor hours, we're going to need to find the number of direct labor hours. And since labor was paid $10 an hour, we can see that 20 hours were worked on job 1. The overhead rate is $5 per direct labor hour. That gives us $100 of overhead applied. We can now see that the total cost of job 1, including beginning costs, direct material, direct labor, and overhead applied, is $1,600. We'll do the same thing for all of the other jobs. 300 divided by $10 per hour is 30 hours, times the overhead rate of $5 gives us overhead applied of $150. The total cost of job 2 is $2,100. $150 divided by 10 is 15 hours times 5 per hour, or $75 of overhead applied. This gives us a total cost of $2,225. For job 4, we can see that that will be 40 hours of direct labor, and overhead is applied at a rate of $5 per direct labor hour, which gives us $200. The total cost of job 4 is $5,350. Now that we have computed the total cost of each job, we're going to be able to more easily answer the questions that follow. Now, it is worth recalling that all product costs start out in work in process inventory. They go to finished goods inventory when units are completed, and those same costs go to cost of goods sold when inventory is sold. Given that we know jobs 1, 2, and 3 were completed during the period and job 2 was delivered to the customer, we can see that job 1 went to finished goods and stayed there until the end of September. Job 2 went from work in process inventory to finished goods inventory, but was sold by the end of the period, so the cost went into the cost of goods sold account. Job 3 was completed but not sold, and job 4 remained in work in process inventory. Sometimes diagramming the way the jobs flowed through the system during the period will help you. Our first question says, prepare the journal entries to record the direct material used, direct labor cost incurred, and the manufacturing overhead applied during September. Direct material used will be debited to work in process inventory. I'm doing one overall entry for all jobs. You could just as easily make 4 different entries that total out to be $6,050. We will credit raw material inventory. For the direct labor, we will debit work in process inventory, and assuming it was paid in cash, we'll credit cash. And for the overhead applied, we total it out to see that it's $525. And if we do one overall entry, we will debit work in process inventory for $525, and we will credit manufacturing overhead for the same amount. This reminds you that we debit work in process inventory for 3 reasons. That is, when direct material is used, direct labor is paid or accrued, and overhead is applied. Now for question 2, the ending work in process inventory for the month, well, because jobs 1, 2, and 3 were completed, this will only be made up of job 4. So ending work in process inventory on your balance sheet will be $5,350. Question 3. Prepare the journal entry to transfer the completed jobs to finished goods inventory during September. If you'll remember, jobs 1, 2, and 3 were completed, so we will need to get the cost of all 3 of those jobs and transfer it to finished goods inventory. $1,600 plus $2,100 plus $2,225 is $5,925. That will go into finished goods inventory and out of work in process inventory. Question 4. By what amount will cost of goods sold account increase during September, excluding any over-applied or under-applied overhead? Only job 2 was sold, so the journal entry would be to debit cost of goods sold for $2,100 and credit finished goods inventory for $2,100. And finally, assume the company pays property taxes totaling $5,000, $4,000 of which is for factory operations and $1,000 is for corporate offices. How would this transaction be recorded? Well, the product costs will go into manufacturing overhead since property taxes on factory operations is classified as an overhead cost. The $1,000 for the selling and administrative facilities will go into a period cost account, property tax expense, and it will all be paid in cash. So we will credit cash for $5,000.